Really, my journey starts, I was the head of innovation at Yahoo, running their incubator. And I learned a fundamental lesson that when you try anything disruptive in a legacy environment, the immune system attacks you. Because all of our organizations are built to resist change and withstand risk. And yet, disruptive change is now the high order bit. And how do we juxtapose with that is almost all of the work I've been doing over the last decade, because it's bad with big companies, and this is why big companies have a difficult time innovating. They're all architected for efficiency and for predictability, right? But it's even worse in public sector where the existing policy is the immune system. We have bankers fighting Bitcoin, we have taxis fighting Uber, and we're just not progressing society along well enough to deal with what's coming. So I'll talk through a little bit about that. If you're familiar with Singularity University, I'm the founding CEO there. We bring together the world's leading thinkers in the world in the fastest moving technologies. And as Kader mentioned, I'm on the board of the XPRIZE Foundation. I'll mention that in a second. This is the model that we've come up with that emerged 10 years ago when we first started writing this book called Exponential Organizations. And I'm just going to jump to the data that we have from this book. When we launched this 7, 8 years ago, we actually ranked the Fortune 100 against this model. Okay? So how purpose-driven is IBM? To what extent is Goldman Sachs leveraging community or not, et cetera? And we scored the Fortune 100 against this model. I did a segment on a TV show in the US called Squawk Box presenting this index. Really what we're doing is ranking these organizations by how adaptable, flexible, scalable, purpose-driven is the actual org structure of these large companies. The Fortune 100 are the largest 100 companies in the US. And then over a 7-year period, Chandar Nagpal, one of our community members, actually tracked which of these organizations use these characteristics the most and which use them the least. And then he looked at the results after 7 years. And the outcomes are kind of mind-boggling. The top 10 that use this model the most deliver 3 times better revenue growth than the bottom 10, 6 times better profitability, return on equity 11 times. But the killer comes when you look at shareholder returns. Over a 7-year period, the companies that use these characteristics the most deliver 40 times better shareholder returns than the ones that don't. Like, you can't even make this up. We had to triple check the numbers because it's so absurd. So we're pretty clear as we move forward over the next decade that pretty much every company, every nonprofit, every impact project, even every government department will start to structure around this type of a model just because it's better, and we have now a very clear sense of data to deal with this. Let me go back to why this is so powerful. How many of you have seen this chart? Okay, maybe if you saw me. Okay, so what that graph is a graph of Moore's Law going all the way back to 1900. Ray Kurzweil put this together, and he found that we've been doubling computational price performance for over 100 years, way before Gordon Moore made his predictions. And the question that he asked when he saw this data is, why is that curve so smooth and so predictable? We've had wars and recessions and ups and downs in the industry. You should have a very jagged stock market type shape. And yet you see this unbelievably predictable, steady, unwavering progression, and it doesn't make sense. And Ray Kurzweil spent 10 years researching this, trying to understand why this was happening, came up with a fundamental observation, which is that once you take a domain or a discipline, an industry area, a product area, you power it with information technologies, and it acquires informational flow properties, the price performance starts doubling. Most importantly, once that doubling pattern starts, it does not stop. It just keeps going. Okay? And this we have a very difficult time with. Cognitively, this doesn't make sense. You can't have infinite growth. It has to level off, et cetera, et cetera. And the secret there is in these colored in the colored bands that you see here. Because in computation, we've had multiple technologies, vacuum tubes, relays, transistors, now integrated circuits. You can think of each one of those bands as an S-curve, where technology takes off, accelerates, reaches its upper limits. But if you have an information-based environment, something else always takes over the curve, and that keeps the movement going. And so that fundamental underlying paradigm has us go through technology after technology as we extend each one. We're actually reaching the end of the life cycle of integrated circuits. Now, the chips are getting very hot down at the surface levels. We're down to, what, 2-3 nanometers of wire thickness. We're literally touching the bounds of physical reality. But now you have a bunch of technologies clustering at the edge of this, ready to take it to the next level. 3D chip design, optical computing, quantum computing, et cetera, et cetera. And my joke is that quantum computing requires a lot of alcohol to get into, so I won't touch on it here. But suffice it to say, you can pretty much rely on Moore's law continuing. We're entering a world with essentially infinite computation, infinite storage. And how do you wrap your head around that? And this led Peter Diamandis, who's the founder of the X Prize, to write this book called Abundance, charting out that if we could actually harness this acceleration and leverage it, that we'll soon have an abundance of healthcare, education, clean water, energy in about a decade. And what does that world look like? Right? So this is the fundamental paradigm on which we operate. I joined the board of X Prize a few years ago, which has some rather interesting characters on it. Every board meeting starts with, what the hell did Elon just do? And then we have to move on to the rest of the business of the day. And what we do at X Prize is we give large public prizes wherever there are market failures. So the most famous is the $10 million Ansari X Prize, which was offered in 1998 for the first private plane to go into orbit twice within 2 weeks. And that design, that winning design, is now Virgin Galactic. And what's incredible about X Prize is when we put up a $10 million prize, pretty reliably about 40 teams will spend $150 million in R&D trying to win the $10 million. So it's the best leverage model of innovation we've ever seen. And we've now run 7 or 8 major prizes, and consistently that's happening. The most notable prize we have right now is the Carbon Extraction X Prize, funded by Elon Musk. $100 million is the largest public prize in the history of humanity. We're in the semifinals of that prize, and we have 1,300 teams in the semifinals. So the collective innovation coming from that, we hope, will yield some unbelievable outcomes for extracting carbon at scale. And it's a leveraged form of crowdsourcing and open innovation that's incredible. And you'll hear, I think, more about open innovation this afternoon. Now, if you look at the numbers here, this chart goes to about 2010. So you might ask, where are we now? Here's where we are now. We're exactly going at pace, hitting this doubling. You know, when Gordon Moore first made his predictions that we'll double transistors on a chip every 18 months, it was understandable when you went from 16 to 32 to 64. When you go from 1 million to 2 million to 4 million, that's the whole other level. Now we're at like 4 billion, going to 8 billion, going to 16 billion every 18 months. It kind of blows your mind that that's even possible, right? And this is the challenge, because we as human beings don't see exponential growth. All of our education and training and intuition about the world teaches us linear extrapolation. If you're running a business, you often take your performance and draw a line. Where will we be? But if you're operating on an exponential curve, that's a very, very different heuristic. Just as an example, if you take a piece of 8.5 by 11 paper and fold it, it's about 0.1 millimeters thick. So if you fold it, you have 0.2. If you fold it again into quarters, you have 0.4 of a millimeter. Where do you think you'd be at 50 doublings? And most people go, 50 doublings of a piece of paper, maybe I'd be about here, maybe I'd be about there. No, it turns out at 50 doublings, you've gone to the sun, because those doubling patterns add up really, really, really fast. And you may all remember the fable about the king and the chessboard, where he put a grain of rice on every, and doubled it on every chessboard. Because it's really hard to see this exponential curve. Yet that's the underlying paradigm that's driving the world forward. What's unique today that we've never seen before in the history of mankind is we now have a dozen technologies operating on this curve. In the history of mankind, maybe one technology was accelerating at some point, maybe another technology was accelerating. We today have a dozen technologies operating on this curve. For example, in neuroscience, the resolution at which we can image the brain is doubling every year. Drones are doubling every 9 months in their price performance. So if a drone can carry 200 kilos today, it can carry 400 kilos in 9 months. 800 kilos 9 months after that, 1,600 kilos 9 months after that, and then things get really very interesting, right? And this is happening across the board. And when you think about decoding technology, it's really interesting that each of these is doubling, but where they intersect adds a whole other multiplier to the equation. So you take cryptography, which is on its own doubling pattern, you take computation on its own doubling pattern, you intersect them, and you have the blockchain and all of the associated applications. So the intersection of these technologies yields incredibly new product areas that operate on a multiplier of that doubling pattern because of the underlying capabilities.